Hey, good morning, traders. All right, I wanted to do a quick update here on the charts. I want to talk about what I am calling here a little bit of a Santa Claus rally. We're going to dive through some of the major indexes just to determine if this thing has any legs, and if so, how long it will last before I think further selling will ensue. Oops, I've got my hotkey switched here. Sorry about that, guys. All right, I'm going to start with the dollar. All right, here you can see we are nearing the bottom of a channel. I'm going to switch out to the weekly chart so you can see that a little bit better. And I've been talking about this channel in previous videos and posts. We started this channel for the dollar in 2009, about the same time we started our, what I'm calling a secular bull run here. And the dollar has strengthened continually while stocks have simultaneously also gone up from that point. If I jump over here to the SPY and we're on the weekly here, you can see, well, that's not, okay, you can see this white trend line here. Let me get out an arrow so I can properly point that out. And I'm just going to make that arrow white so you can all see that better on the video. All right, I started this trend line here on the weekly in 2009, and you can see this is the SPY index, only up since then. With the caveat that there have been a few deep drawbacks, COVID 2020, 2019 notwithstanding, and we started a channel there on the SPY. All right, back to the dollar here. Let's discuss the dollar just a little bit more because it's very important. Where we're at is critical. You can see, I have this arrow here. We are here. Now we are under, first of all, under the 50 week moving average, which is this blue one, under the 200 week moving average, simple moving average, and under the 350 week simple moving average. Very bearish for the dollar. And we're also at the bottom of this long-term channel, testing it once again. All right, so we tested it down here in 2011 time frame. We tested it again back here in COVID time frame, 2020, 2021, and now we're testing the bottom of this channel once more. Now, if this channel breaks, the dollar, which has already lost, 50% of its buying power since 2020 when it comes to commodities, anything that is considered a commodity, and many goods as well that consumers purchase have doubled in price since COVID. All right, there's you only have to look at eggs. The price of GPUs, the price of RAM now. And I know there's other variables involved with those price increases, AI for the GPU and RAM cases. But the fact of the matter is, I mean, even if you look at gold since COVID, what has gold done since 2020? Let's see, where do we start here with gold? We've priced down here around 1,500 dollars per troy ounce, up right now at $3,860 per troy ounce, more than doubled. Gold is telling us something about the dollar. Gold is the lead indicator. It's not like we have less gold on Earth. Yeah, we have more people and more demand, but why do we have more demand? That's the question we have to ask with gold. And the reason we have more demand is uncertainty about the future. This is a hedge against uncertainty about how the dollar will end up. And back to our dollar chart right now. So people are buying gold and they're buying silver to hedge against that uncertainty. And why is there uncertainty? Because once again, we are at the bottom of this channel. And you see this white trend line here, guys. If I zoom out here to the monthly, this starts all the way in 1984. It's a very significant trend line. It's becoming less significant, but I started this at a wick high here and follows through. We got a couple wicks here on the monthly. Another time we tested this back in 2020. All right, just before, or yeah, just after the COVID situation. Then we broke through this and have been using this trend line as support on the monthly. All right, you can see a couple times we wanted to break down below it and have tested the underside of this channel. But on the monthly, we have really never confirmed any move below the trend line yet. Will this occur in the near future? Now back to the weekly here. If we break this white trend line, which has become weaker and weaker because we are breaking through it, it's kind of like a sledgehammer on a cement, pavement or driveway or road. The more times you hammer at it, the weaker it becomes, and eventually it breaks. And it's just really interesting that we're getting this trend line, intersecting the bottom of this channel. Will this be the time that we break this channel? And if the dollar becomes weaker, then what happens? We'll continue to see gold smash onwards and upwards. I think gold reaches $10,000 before this gold run is all over. It could be another year before we get there, but I see silver doubling as well. I see silver going to $120 dollars, and I'm not going to do Fibonacci here because I'm not prepared to do that, but you can do some Fibonacci sequences to get those levels. All right, now let's just jump over to the SPY and talk about where we are. Now, this is, I'm going to jump over to my SPX chart because that is actually a more accurate representation. And you can see I have some arrows here talking about, I started a video and got interrupted, so I ended that video and started all over again. But again, we started this particular channel in 2020, all right? And the SPX, or the S&P 500, has gone up only ever since. You can see right now we are at the, I'm going to change the color of this arrow. I just like white better. I think the contrast shows up better. We are at the top of this channel. All right. Does that mean that we come down like these arrows indicate? No, it doesn't, guys. We have to see what happens with the Fed decision. We have to see what happens with the dollar. I mean, if the dollar breaks below that channel that I was talking about and gets weaker, then the possibility of a blow off top here begins, and we could just break the top of this channel and go up instead of coming back down into the channel. So we're watching this closely for confirmation, and you guys should all have this channel drawn out on your charts. Oops, let me just grab my arrow here, because this is giving us a good idea of where stocks will go, and then crypto usually follows the stocks. So this is this is what we're watching now. If we have this Santa Claus rally that I'm suggesting we are having and will continue through maybe Christmas, then it's a good possibility that you see stocks just kind of like I've got it squiggled there. I mean maybe just continue to press up, sideways, or up against this line until finally in January sometime we'll see a breakdown. And I see that very well happening, especially if the Fed actually does drop interest rates. It is going to decrease the buying power of the dollar, and that has to be reflected in stocks somehow. I know they're already overpriced, way overpriced. We all know this. We can sense it. The collective community of traders knows that there's something very much not right with the way we are right now. And again, if I go back to my SPY chart and I go to the monthly, I have this trend line from 2009. Guys, we can come all the way back down. Whoops. Let me get rid of that. Sorry, guys. I meant to grab that arrow. Whoops. All right, undo. I hate when this stuff happens while I'm doing a video. Anyways, I'm just going to grab the arrow. All right, we can come all the way down to this trend line here. And my OCD is firing, so I got to delete that little blue line. Otherwise, I'm going to be bothered. Okay, here we go. My spectrum side is firing off right now. Okay, I got this trend line here, very important, guys, and we can come all the way down and still be in a bull market. That, guys, right now is, you could come all the way down to $330, 300, maybe even lower than that. That's a 50% plus drop from where we're currently at. And can you imagine the pain that's going to cause a lot of people and the bears that will come out if we made that kind of a drop? Now, I'm not saying we will. I don't personally think we will, at least right away. Maybe sometime in 2026 that does happen. But I do think we'll come back down maybe to the middle of this channel, which I have drawn on the weekly, maybe to the bottom of that to test that. And then we can start to consider whether we break that channel. But at this point, that's, we're at the top of our channel here. And that's a video or discussion for another time. All right. But anyways, 50% and you're still in a bull market, you will have so many bears coming out crying about how the market is, going to zero or whatever. I mean, doomsdayers will literally be, all the moon boys will turn into doomsdayers. We watch it happen. That's the way it works, the psychology of the market. And really, that is where you should be buying. I mean, you should have a good cash reserve set up and ready to buy down here at this trend line, because I don't know personally that we will break that, not with the Fed continuing to keep these these printers hot, fired up. All right, I think rather we'll go into more of a hyperinflationary recession, or possibly even depression, something we've never seen before. And guys, what that means is just the cost of everything continues to go up, where it's so exorbitant that we just can't afford to buy basic goods and services anymore. And that's what we're seeing with the stock market. The reason the price of stocks have gone up is because of inflation. And they're just getting more and more expensive, more and more extended. It's a very dangerous situation, but the Fed really has no elbow room. Either way, they're in a lose-lose situation. The market either crashes and comes back down to reasonable levels, or it continues to fly high. And if it continues to fly high, that just means we're just going to continue to be outpriced in terms of wages versus actual assets. Housing market is overpriced. Everything is overpriced, but it will continue to do that, guys. So we have to keep this in mind. It's not a comfortable or pretty situation either way. All right, one thing I wanted to do is jump over to, no, let's say Apple here. Let me just bring up Apple. All right, because Apple, it's a 4 trillion plus stock, and also you can see we are in the channel here. And where are we at, guys? We're at the top of the channel. Once again, Apple is a leader in the market. What happens with Apple and the Mag 7 generally happens with the rest of the market. All right, so if I'm correct here, and let's say we get a little bit more of a Santa Claus rally, we go sideways to up-ish, and then drop, then we come back down to the middle of this channel, possibly even to the lower end of the channel, and that's about, let me measure it out here, but I think that's about a 20% or more move, and 25% on Apple. All right, so these are the guys you got to watch. Apple, Nvidia. I've got Nvidia here. Of course, we know that Michael Burry shorted Nvidia. Can we see anything here? And again, I'm usually on the daily chart, but guys, today I'm on the weekly chart. Let's just see if we can spot any sort of channel here as well. Steep channel. So far, this works out. Let me bring this up. And so Nvidia has actually exceeded this channel here. All right, and now we've come back in. Now right up here, guys, is where Michael Burry shorted. And actually, when we were at this level on Tesla and Palantir, I shorted Tesla Palantir first time ever with my indicator, and made profit, guys. So the indicator works both ways. The indicator that I've been talking about, and that is I call it dots and blocks for lack of better. I don't have a good naming convention, but it works. It works. You can see down here where my indicator fired off a buy signal on Nvidia at $85. And we really haven't, now these are sell signals, guys, but I like to see these sell signals inside of one of these red liquidity blocks, and we don't have that yet, but we are at the top of this channel with these three sell signals. So that could be interesting, telling us that a move down is coming soon on Nvidia as well. Okay, enough about stocks. You guys know where I'm at with stocks. Basically this, another week or two of this Santa Claus rally, and I think we are due for a pullback. Is Bitcoin predicting this pullback ahead of time? Because we've seen Bitcoin kind of lead as an indicator. Now here I have a weekly, and I'm going to start here because I want to show you what I did. I'm going to delete this thing here. All right, and I'm going to delete that because I'm going to show you exactly what I'm looking at here. This is a channel that Bitcoin has been in. Really what I did is I took the Pi cycle top indicator, the top of our market in December of 2017, and connected that with the top when the Pi cycle indicator fired off in April of 2021, and I just extended that. Now, I want to talk a little bit about this Pi cycle top, but not too much because I have already discussed this in previous videos quite a bit. All right, but this Pi cycle top trend line is very important. If we zoom in here on the weekly, which I'm going to do in just a second, all right, you can see we hit this 1 on the weekly, 2 on the weekly, 3 and 4 times, could not break above it. That's where this little circle is. On the daily, it's much larger, and then we just collapsed. Now, I've talked about Mr. Wyckoff here. I may as well just, for the sake of reviewing, bring it up real quick on the daily. So let's zoom into the daily. All right, first of all, you will see, guys, I have this megaphone pattern here. All right. We'll discuss this part down here in just a bit, but this was also a negative indicator, including the fact that we couldn't break above the top. That's 2 bearish indicators. And then we broke below not only the 350-day moving average, but the bottom of this megaphone pattern, indicating the bear market may have started. Why do I say the bear market may have started? Let me zoom out here. It's quite, really technical analysis is not that complicated, guys. Anytime we are above the 350-day moving average, like over here in 2018, or I mean 21, all right. So we're above, we started coming above the 350-day moving average in 2020. Anytime we're above it, we're in a bull run. Anytime we break below it, it seems to be an indication that we have started a bear market. And then we break back above it. Over here in 2023, we broke back above it. Been in a bull market ever since. And now look at this big. This is not just a wick down below the 350 day. This is a big break down below the 350-day moving average. All right. That's telling me, that's just yet another indicator that we are starting a bear market. That's contrarian to what most people believe. Now, I came over here to give you Mr. Wickoff, so let's bring that up. All right. Now, I had this Wickoff pattern drawn sometime before it actually played out. I saw this accumulation. I labeled the spring here. And then we went up, that was from the spring, we just went up. And then I saw this distribution pattern, this distribution channel taking place. Here is the spring. And at this point, I also, not only did I see the spring, and not only did we hit the pi cycle top trend line, but let me pull up my indicator here, guys. We had a big liquidity block. See that liquidity block? And my indicator fired a sell signal. Lots of stuff going on showing me we were going to drop at that point. And I should actually have another arrow going from here down. I don't know where it went. Down to this red trend line. All right. All right, where does this red trend line come from? I know I keep rambling, but I'm showing you all the things my chart is showing me because they're all important. So I'm going to delete this arrow. We reviewed the Wyckoff pattern, which currently is playing out. Gonna disappear it again because I don't want my chart to be noisy and a distraction. Zoom out to the weekly, and let's talk about this red trend line. This also comes from the top in our market, which was again April of 21. All right, so we hit this top here. I drew the trend line through the body of the next high, which happened in November of 21. All right, you can see we hit our heads on it once over here. And then when we broke through big, indicating that this line is in fact very significant. Then we came down, touched it again, all right, used it as support, and came down and touched it again. Now, I'm seeing this live, guys. What's happening here? I want to show you something, all right? I'm just seeing this now. What we are actually forming here is shoulder, head, and I do believe we're going to come up to 100,000. I'm going to talk about that in a bit on Bitcoin. Head and shoulders pattern, another bearish indicator. Don't shoot the messenger, guys. This is contrarian to what a lot of analysts are pointing out right now. I want to be a bull. I really do, guys. The charts are just not showing me that right now. All right, so forming a head and shoulders pattern. Let's zoom back into the daily and talk a little bit more about this flag. Again, I've said we're going to 100,000, maybe 96,000, maybe just shy of 100,000. We could potentially wick up and touch the underside of that 350 day moving average as well, which is up at 102,000. But I'm thinking somewhere along the bottom side of this trend line, which is the bottom of a megaphone pattern, and that'll form a nice bear flag. The bear flag is currently bullish because I do still think we're going to 100,000 before we drop further. So you could make, a good 10% before this bear flag completes. And why not? If you want to capitalize on this, if you really, trust the mechanics of this analysis, which I do, grab your 10% before you sell. All right. So we hit the bottom, the underside of this, this trend line here somewhere before the buying subsides, and further decline can be expected. And of course, this isn't 100%, guys. This could all prove wrong with some sort of event happening. Who knows? But currently, the way it's looking as we hit the underside of that, and we come to my target number one. Why is this target number one? Well, it's a strong area here. You can see way back here in 2024, we hit our heads on the underside of this trend line about 5 or 6 times before we finally broke through. So 72,000 would be the low here, and I have the area up to 77,000. Okay, let's talk about target number one. I have a question mark there. Why do I have a question mark? Because I don't know if that's going to be the bottom of this, the local bottom here of this selling. And the reason I say that is there's a multiple number of reasons, but MicroStrategy's current average buy-in is, I believe, 74,500, something like that. What happens if they have to reverse their strategy to maybe avoid getting delisted from the NASDAQ is currently being the rumors floated around, or, to, for some reason, got to pay back shareholders. Who knows what happens? I honestly don't know enough about the situation to know when they get into trouble. I just know that under 74,500, they will be underwater on Bitcoin. And how that plays out, how that impacts MicroStrategy is a big question mark. But it could be the start of a domino toppling. It could be. I don't know. Anyways, that is my first target. And below that is the bottom of this channel. And I never did show you. I realized all my rambling and talking, I never did show you on the weekly what I was about to show you. I get sidetracked. I talk about all these things. All right, so I'm going to take a trend line from when we hit the pi cycle top trend line to the bottom of our bear market. All right, you can see that's the 350 week. Interesting. 350 week currently intersects the bottom of that last bear market, was that intersection. All right, that's about 75%, give or take. All right, now what I'm going to do is hold the control key down on my key, and I'm just going to copy that exactly. Look at this, guys. We go from the top, the pi cycle top, where we couldn't break through. Look at where it takes us, guys. This is amazing. This technical analysis, this is why I love technical. It takes us exactly to 77,000 and the bottom of our channel. And this is below this red trend line. So we break below that and come down to 77,000. Very interesting scenario, guys. And that is almost 40% from the top. I definitely can see that happening. And I want you to be aware of how this could play out. Draw these patterns on your chart. Practice this stuff, guys. This is how you get better at trading, and this is how you can help determine what the future price action is going to be. All right, I think I have said enough on the review here of the Santa Claus rally. So the best I can conclude at this time is the Santa Claus rally continues for a few more weeks. We hit 100,000 on Bitcoin, and as I've already reviewed on the SPY and Apple and Nvidia, we're at the top of a channel on all of those, and we're at the bottom of a channel on the dollar. All right, bottom of a channel here. So dollar continues to drop, and when that, it's just unknown at this point. I think we rally a little bit further before we drop, or maybe the Fed surprises everybody and doesn't lower interest rates, and then the dollar stays in this channel, but stocks continue to drop. Unknown, but you got to have this stuff drawn out because that gives you kind of a better idea. One more thing before I conclude this video: the VIX is low, and I have a trend line here. I think the VIX is about to pop once again around just after Christmas, when people start selling the market, and we could have a little bit of a flash crash showing up on some of these charts, taking us to the bottom of these channels that I have here on the SPX and Apple and Nvidia. Did I have a channel on Nvidia? I think I did. Yep. Yep. And could take us to the bottom of those channels, guys. Okay, that is enough of me rambling on and on in this video. But I did just want to make you all aware of where we're at and where we're going in this market. Hopefully that helps. And if you have any further questions, please feel free to ask those in the comments section, either on my site, which was displayed there, or the YouTube video or TradingView. By the way, I like this new thing that TradingView has done and extended my videos, so I'm not worried about them getting cut off at 20 minutes. I can kind of keep going and remember to talk about and discuss all the things that I wanted to. So kudos to TradingView for that. Comments can be made anywhere, and I will review those and answer them at my convenience. Thank you, guys. Peace. See you in the next video.